With $30.4 billion in FDI in the UAE over the past 3 years, and with the UAE already moving rapidly up the global rankings, what is the likely impact of the new FDI law, which was enacted last year, on investment flows into the UAE? First, let me explain the FDI law to you. So on September 23, 2018, an FDI law was issued to develop, foster and nurture foreign investment in accordance with the policies of the UAE. Now, this law tasks a committee known as the Foreign Direct Investment Committee with proposing a positive list to the UAE Cabinet, which will set out economic sectors in which greater levels of FDI will be permitted. Why was there a need for such a law? So, until the enactment of this law, foreign investment into the UAE had to be effected either with the support of a local sponsor or partner for onshore investment, that is, or if local sponsorship was not preferred, directly into one of the UAE free zones. However, in the case of investment through free zones, the ability of foreign investors to operate onshore in the UAE has been considerably restricted. And this had impacted the appetite of investors from outside the GCC to commit fully to investment in this region. So the FDI law has changed the need for local sponsorship in certain sectors and provides for 100% foreign direct ownership in such sectors. This is where the positive and the negative list comes into play. With regards to potential investment into restricted sectors on the negative list, there is likely to be little change in the investment climate for FDI. To the extent that investors are keen to invest into negative list sectors, they will still be able to do so only through local sponsorship arrangements. Where an investor may seek control over 51% of a negative list entity, they will be able to apply for approval from the regulator, expected to be either the Foreign Direct Investment Unit or Committee for such control. However, where there is likely to be a considerable increase in FDI is an investment into the positive list sectors, as mentioned below. Tangible impacts? Well, increased appetite for establishing local manufacturing businesses, evolution of the UAE as a regional manufacturing hub for the wider GCC, Indian subcontinent, and African markets, and third, utilizing UAE's geographic location for improved transport and logistics networks. Well, this can happen through the likes of, say, Emirates and Etihad, or through major logistics hubs of DP World's Jebel Ali Port or Abu Dhabi Port's Khalifa Terminal. Now, the key challenge will be for the UAE government to strike a balance between encouraging increased investment and maintaining some control of investment through the negative list. But the initial signs are that the FDI law is being seen as a significant step forward and that it should drive up levels of investment into the UAE. Well, we will continue bringing to you stories about investments and other new laws coming into the region, so don't forget to hit that subscribe button and, of course, like, follow and comment on this video.